Hello, this is Brad Harvey with Harvey Investment Management with the 2022 Q1 or Quarter 1 market overview. First of all, I'd like to give a big shout out to the Jayhawk Land people out there. What a great victory for the national championship in basketball. I've been a fan for as long as I can remember, and it was a great, exciting game. So let's get on to business. The first quarter certainly was interesting from an economic and investment standpoint. We had the war in Ukraine, we had massive inflation, we had interest rates going up, we had markets going down. So we had a little bit of everything. If you can remember, at the end of 2021, we talked a little bit about kind of an interesting but volatile year. Well, certainly 2022 is no different. Definitely volatile, and most of the major averages are actually negative for the quarter. So let's go through some of the numbers. First and foremost, the S&P 500, again, these are relatively round numbers. The S&P 500 for the quarter was down 4.9%. The Russell 3000, which is an all-cap index, was down 5.46%. And small caps were down 7.8%. So that gives you a quick wrap up for the US equity markets. Now the foreign equity markets down 6.45 for foreign large cap and down 7.57 for foreign small caps. So again, not great news in equity land. Although toward the end of the first quarter, things were certainly recovering and looking a little bit better. Now for things that actually showed positive. For the quarter, oil prices, they were up 31.99%. So we're going to call that one 32%. For real estate, we're looking at the REIT Broad Market Index for the quarter, down 6.58%. Commodities, broad-based commodities. This obviously does include energy, oil and gas, precious metals, agricultural products, and so forth, up 24.8%. Quite the quarter. Now, what does that mean? It means inflation is here. It's probably here for a while. So we want to be very careful with that going forward. Speaking of inflation, you can't say that without thinking about interest rates. During the quarter, the 10-year Treasury yield, so the yield on a 10-year US Treasury bond, was up 57.2%. To put numbers on that, it was just over 1.5% at the end of the year and closed out the quarter at 2.37. I know that's a lot of numbers. What does it really mean? Well, as first quarters go, it wasn't that great. Does that mean that the rest of the year is going to be poor? Not necessarily. Earnings thus far have actually been okay, but we want to make sure we're paying attention to inflation. I think that's going to be the theme for the rest of this year and probably for the next couple of years. That's not to be running scared, but keep in mind, if you look at some of the other videos on our channel, inflation tends to be really, really poor for fixed rate long-term bonds, so long treasuries. We don't want to own those things because after you take out the impact of inflation, we're liable to be losing money. Stocks tend to do okay during inflationary times, especially those that are earning money. Those that are heavy users of leverage or bonds, lending, they tend to not do as well because their borrowing costs tend to go up. And if we don't have some exposure in commodities, whether it's energy, oil and gas, electrical utilities, industrial metals, things like that, perhaps we want to take a look at that, because those are the category or the assets that are the most positively correlated with inflation. So this is Brad Harvey with the Quarter 1 2022 Market Overview.